This isn't just going to be a summary of some old, dusty book. Nope, this is a story. It's about how some of the most powerful financial ideas ever written helped one person find something, well, something a lot more valuable than a high rate of return.
So let's just start with the question that, let's be honest, a lot of us have asked ourselves. When you've got a family, when you have bills piling up, does the whole idea of playing the market feel less like an opportunity and more like a high-stakes casino where you're betting your family's entire future?
I want you to meet Elias. Picture him late at night sitting at his kitchen table. The house is quiet, but the numbers on those bills, they're screaming at him. He's a good guy. He works hard, saves what he can, but he feels like he's just treading water. And the thought of investing, man, that just feels like another risk he absolutely cannot afford to take.
To Elias, the market was nothing but speculation. It was this chaotic, crazy casino where people just gambled on what he thought of as expensive pieces of paper, totally disconnected from the real world. You see, Graham says an investor owns a piece of a business. A speculator, well, they just hope somebody else is going to come along and pay more for that piece of paper later. And as far as Elias was concerned, everybody was just speculating.
But then, one day, he stumbles across this old, kind of dense-looking book, The Intelligent Investor. And honestly, he's skeptical. But this one sentence, it just leaps off the page. A stock isn't a lottery ticket. It's a tiny piece of a real, actual company. And for Elias, that simple idea, it was a complete revelation. The first little seed of a whole new way of thinking was planted right there.
So he keeps reading, and he discovers what might be Benjamin Graham's most brilliant idea. And it's not some complicated formula, it's a story. It's an allegory about this imaginary business partner you have. His name is Mr. Market. And every single day, without fail, Mr. Market knocks on your door and offers to either buy your shares from you or sell you his.
But here's the catch with your partner, Mr. Market. The guy is completely unhinged. I mean, he is an emotional wreck. Some days he shows up just giddy, euphoric, offering you these wildly optimistic prices. Then the next day he's in a total panic, convinced the world is ending, and he's practically begging you to take his shares for pennies on the dollar. And suddenly Elias realized this was the market he recognized. The wild mood swings, the chaos. It was just like the crazy headlines he'd always been so afraid of.
And then, bam, the aha moment. You don't have to listen to Mr. Market. You don't even have to open the door. You can just ignore him. Or, even better, you can use his moods to your advantage. You buy from him when he's freaking out and selling everything cheap, and maybe you sell to him when he's irrationally exuberant.
For Elias, this changed everything. He realized he didn't need a crystal ball to predict Mr. Market's next move. All he had to do was control his own emotions, his own actions. And for the very first time, he felt this incredible sense of control, not just over his money, but over his own anxiety.
Okay, so Elias has a handle on the emotional side of things, but now he needs a practical tool, right? A real strategy. And he finds it in Graham's second cornerstone idea, the margin of safety. And this wasn't just some clever investing term. For Elias, this was the blueprint for protecting his family's future.
The goal is actually shockingly simple. The whole idea of a margin of safety is about buying a business for way less than what it's actually worth. Think of it like buying a dollar for 50 cents. For Elias, this became this powerful, practical rule for building a financial fortress around his kid's college fund. It gave him room to be wrong and still be okay.
And the best part? Graham even provides a simple checklist for someone like Elias, what he calls a defensive investor. These aren't crazy, complex algorithms. They're just common sense rules like, is the company big enough? Is it financially strong? Does it have a long history of making money? It was basically a father's checklist for making sure his family's future was never put at catastrophic risk.
And as the weeks turned into months, you could just see this change in Elias. Those late nights spent stressing over bills, they were replaced by quiet evenings of research. He went from feeling powerless and anxious about the market's chaos to feeling calm, patient, and disciplined. He wasn't playing their game anymore. He was finally playing his own.
And that, right there, was the real transformation. He realized that being an intelligent investor, it had very little to do with being a genius, and everything to do with your character, your temperament, your discipline. Honestly, the peace of mind he gained was way more valuable than any stock tip he could have ever gotten.
In the end, it all came down to this. Graham once said that if you had to distill the secret to sound investing into just 3 words, it would be these: margin of safety. For Elias, these 3 words became his mantra. They were his secret to building wealth, sure, but more importantly, they were his secret to finally being able to sleep at night.
So that leaves us with one last thing to think about. What all of Graham's lessons really teach us is that we can't control Mr. Market's wild mood swings, but we can 100% control our own. So maybe the real question isn't how do we master the market? It's how do we master ourselves? Maybe the biggest risk isn't out there in the world, but right here, inside us.